Hello, and welcome to the second quarter 2025 market update webinar. My name is Dan White, one of ARC's associate portfolio managers, and I will be moderating today's call. This call was pre-recorded on July 11th, 2025. With that, I will now turn it over to ARC's CEO and CIO, Kathy Wood.
Okay, thank you, Dan. And as always, if you'd like to learn more about what we are thinking about the macroeconomic backdrop, please check out In the Know. It seems as though the market is climbing a wall of worry. There has been so much to worry about. Trade tariffs on, trade tariffs off, the bombing of nuclear facilities in Iran, other geopolitical risks, slowdown in the economy becoming more apparent, and yet the market continues to move up. And one of the reasons for this, we believe, is the market is beginning to understand that President Trump, or the Trump administration, has probably thrown as much bad news early in its term at the markets, because as we move into campaign season for midterm elections next year, the Trump administration would like two things to be true. One, very strong economy, and two, very strong stock market. Of course, the other big uncertainty out there was the big, beautiful bill, including the tax cuts that were supposed to expire at the end of this year and now will not. There are other tax cuts in there. Probably most important and not as well understood is the effective corporate tax cut to somewhere in the 12 to 14% range. So the corporate tax rate itself will stay at 21%, but with the immediate deduction for or expensing of capital goods and in some cases other infrastructure, the effective corporate tax rate could drop to one of the lowest in the world, in that 12 to 14% range. And one of the things we find very interesting about the narrative out there is the negative sentiment towards the US and particularly the US dollar, when many of the policies that are being put in place now are very capital friendly. And we believe the return on invested capital in the US is probably going to go up relative to that in the rest of the world, which is dollar positive. I know the headlines were screaming the dollar had its worst start, or the worst first half of the year since 1973. And that's a very meaningful time period. That was when monetary policy was completely unhinged after we closed the gold window, and OPEC used that opportunity to hike oil prices, well, quadruple them. And of course, monetary policy accommodated that, and we ended up in the great inflation. We are not in anything like that scenario today. If anything, the Fed is too tight. And I think as inflation continues to come down, of course, we'll have the tariff, the occasional tariff hit to inflation, or boost to inflation, perhaps. But Trueflation, which has been a really good guide, is saying that during the next 60 days, we're probably looking at inflation below 2% on a year-over-year basis, including the tariffs. So we'll see if that's right. But we do know that housing prices are starting to fall, and that will have a long tailwind effect in terms of driving inflation down this year and into next year. So with that, Dan?
All right, thank you, Kathy. We will now begin the question and answer portion of today's webinar. Questions were received from our clients, distribution partners, and sent to our fund's X account and Instagram accounts at ARC_funds. With that, the first question, Kathy, I'm coming back to you, and you answered this a bit on your during your opening remarks, but ARC's suite of ETFs have performed very well through the first half of this year, and especially since sort of that market panic post Liberation Day with sweeping tariffs. What's your outlook for the rest of the year to continue this?
Well, I think that the tariff sell off was cathartic and another test. And if you look at how our ETFs have been behaving, especially the flagship, which includes healthcare, which has been a very difficult sector, we basically held technically, and I think that has been important to some people. But more important than that are the three headwinds that we were facing in the last 4 years, now turning into tailwinds. The first one, of course, is interest rates. It is becoming clear that interest rates are not going up. The fear during the tariff turmoil was that this would drive monetary policy towards much tighter conditions to head off tariffs. It doesn't seem like tariffs are getting much into the inflation indicators, which therefore suggests that they are being absorbed more by profit margins or cost cutting elsewhere, thanks to AI, for example. So interest rates are not going up. And if anything, they will come down. The second headwind was the concentration towards very few stocks, the Mag 6, seemingly, in that 4-year period. We hit all-time highs in that condition. That was not a healthy bull market. The bull market we're seeing now is broadening out, and that is very healthy, and I think giving many more people confidence that it is sustainable. And then in our own case, our valuations during COVID went to very high levels. If as we measure it in a metric we developed with S&P, based on enterprise value to adjusted EBITDA, adjusted for stock-based compensation and R&D, both the S&P and our flagship, our portfolio was selling at a 275% premium to the market in early 21. And during tariff turmoil, dropped almost to a market multiple. Now we are above that market multiple, as we always are. Typically, we are in the 75 to 100% premium to the market. And I think we might be toward the lower end of that right now. So that headwind has also turned into a tailwind, especially because we believe the revenue growth and margin expansion dynamics in our portfolio will overwhelm this premium valuation, because in our 5-year investment time horizon, we assume we're going back to a market multiple.
Great, thank you, Kathy. And going to stay with you here, it's been on the news a lot, and we've received numerous questions on Elon's formation of a new political party. So just broadly speaking, what is ARK's take?
So this gives me an opportunity to talk about the lens through which we put companies from a bottom-up point of view. We have 6 metrics, 4 of which are scored 0 to 10. The first one is people, management, and culture. So the question on this one is Elon so distracted by all of this that he is not present to lead these companies? If anything, since he stepped aside from 24/7 at the White House, Elon is much more present. But I would add one other thing. Just watching him at work convinces us that another metric that we score, moat or barriers to entry, those are actually growing, we believe, in each of his companies. And that's all around technology, learning curves, and really speed at which Elon and his teams are operating. And Elon's modus operandi is to set timelines. And if those timelines in any of his companies fall short and milestones fall short, he is in there working on that bottleneck and doing a very good job. So, this is an executive who's launching a robotaxi service that we think is going to scale very rapidly, regulations permitting. And in SpaceX, which of course we own in our venture fund, it's the largest position. You can see the success he's had there. He owns roughly 90% of the satellite market in the world. So great success there. And Neuralink, 8 patients now, paralyzed or with ALS, whose lives are being transformed by innovation there. And again, he couldn't do it without surrounding himself by some of the best and the brightest engineers, scientists, and business people. So that's how I would answer the question, Dan.
Great, thank you, Kathy. So not just a great allocator of capital, but of his own time as well. And staying here with Elon and Tesla, we're going to shift to that robotaxi you mentioned. Sam, can you walk us through your thoughts on Tesla's recent robotaxi launch, sort of how you see the full autonomous ride-hailing industry shaking out, and in your response, if you could specifically mention Waymo and Uber, that would be helpful for our listeners.
Sure. So the launch so far has been extremely great, I would say. It's out. If there's any accident with any Tesla, it gets plastered all over the news. No one's even mentioned it really. It's like I talk to some people and, they don't even realize that it's happened, which shows you just how early it is and how smoothly it's operating. Elon tweeted that they're going to expand the Austin area. They've reached out to Phoenix to expand some testing there. He noted that they are going to expand to California in a few months. So this is going extremely well. And to be very clear, if Tesla's robotaxi scales the way that we believe it will, which is fast and cheaper than the alternatives, then this is a showstopper for companies like Waymo and Uber. So, if it does scale quickly, and we believe it will, and they do have the lowest cost vehicle, so that should translate into the lowest cost per mile transportation, then that really undermines both of those business models for Waymo and Uber. Uber, where they are trying to go, and what could work for them is to partner with other autonomous players, because the trips throughout the day, there's peaks and there's troughs. And so partnering and being able to meet peak demand through human drivers with Uber is the strategy they're going for. But the fact that Tesla has so many people who can put their cars into the network, similar to Airbnb, then that really removes the need for Uber for Tesla. So that's how we're looking at it currently and tracking closely along.
I'll just add something there. It is interesting to learn that Uber and other companies, automakers, seem to be open to potentially working with Tesla. I think that's true, right, Sam? All of them have basically said they not. I'm thinking here of Uber, at one point Ford, although I don't know if that's true anymore, but they're beginning to understand that Tesla will be a force to reckon with.
Absolutely. And we're not going to dive into Grok 4, but the pace of acceleration in AI and spearheaded by Elon, I think you'd have to really, really think something is going to happen such that the cars aren't going to be fully functioning in the US. And I think it's interesting in Elon's speech announcing Grok 4, right? It's like, what is the ultimate test for AI? Sure, it's like humanity's last exam are toughest questions that the average person might answer 5% of if they're an incredibly smart person. But he noted the ultimate test for AI is reality. And the place where AI is running up against reality is in autonomous vehicles. I think, if you extrapolate the progress in the non-real world AI and you continue that forward, to me, that adds to my confidence that in the near future, these are really going to scale and be far better than human drivers.
Yeah, and I'll just add something there. I know this is a little bit away from that, but in terms of what Sam just said, we have been shocked at how quickly Grok has been able to catch up with OpenAI's models. And in fact, on the test that Sam is referencing, Grok got to performance that O3 Pro reached in June. Grok got there in February. And Grok, that was Grok 3. Grok 4, which just came out, and I think you can go listen to the presentation that Elon gave around it. It has surpassed everybody. And it started so much later than OpenAI. So talk about focus and performance. It's incredible. And so when we get questions about Elon being distracted, we can, one innovation after another, say, okay, well, no one has been able to beat him at this. So I think we're going to see many, many more of those from Elon's companies.
And that was while he was spending even more time at the White House.
That's right. That's right.
Great, thank you, Sam and Kathy. And for our listeners, the research team does a great job of putting a lot of this into chart form on their various X accounts. So I'd encourage everyone to go take a look there.
Right, and so that would be Joseph JSOJA at ARC on X, right?
Yes, Frank, Sam, and Daniel as well. So shifting here to the next question. The next question is on ARC's participation in Circle's IPO, but not only participation, but ARC was the cornerstone investor for this IPO, and the question involves around trimming some of the position that we've seen through the daily published trades. So, Lorenzo, Kathy, can you just maybe give the audience a quick update on Circle and then sort of the decision of some of the trims here?
Sure. So perhaps for the audience also, I think a lot of the trades that we do obviously are public, and the holdings in several of the ETF that we manage. I think people perhaps don't know that there are rules around the ETF in terms of concentration, number of holdings, and so we have trimmed Circle since the IPO. The IPO was at $31, and it traded on the opening day at 67, I believe. And so the stock went up during the next 2 weeks, 2 weeks to 3 weeks to $300. And so we've trimmed some of the position. This is still obviously one of the top holdings, as people can see in RKK, in W, and in F. I believe in the top five in each of these funds. So this has nothing to do with the conviction in the company and Jeremy, and any latest updates that we've had on Circle and its positioning, but more so about portfolio management and taking some risk off as the stock traded basically 10x upward from the IPO price. Yeah.
So Lorenzo, why don't you just state the investment case for Circle and why it remains in our top 10?
Right. So Circle is the issuer of the second biggest stablecoin in digital asset, USDC, with $62 billion of supply and circulation. So they're with Tether, the two biggest companies really spearheading tokenization and stablecoins in general. They're also they have several products and services around the blockchains, EVM blockchains in particular, but also Solana in terms of interoperability and being able to send USDC through these various blockchain, as well as minting and redeeming USDC. And now they're really rolling out the Circle payment network, which is a full stack, more compliant cross-border payment network for institution, banks, and brokerages. And so I think the short answer is we're still extremely excited by Circle. We think they're attacking really a market that is huge, the cross-border payments and tokenization in general. They are in the process of acquiring a banking license. So the thesis is still very much aligned. Again, I think that the trimming is more portfolio management than an opinion or a change in conviction on the company.
Thank you, Lorenzo. And uh, moving to the next one here. So, in sort of a continuation, we've seen the success of Circle and stable coins globally, and we're seeing more crypto start to sort of seep into the traditional world order here, with a few companies that have now launched tokenized shares of private companies. So what, I guess, one, can you just quickly explain tokenized shares of private company? What are your thoughts on them? And is this a good way for listeners and investors to gain exposure to private companies?
Yeah, it's a good question. So definitely, I think we're having a new era of on-chain capital markets that is really starting here, of on-chain and programmable capital markets. So we've seen, like, over the years, I would say like the last probably 5 years, we've seen a number of companies trying to tokenize equities and fixed income in general. And so for the audience, really what they're doing, and there are different methods. I think we're here, we can talk about it, but really is being able to wrap the underlying asset or equity or fund, and being able to issue a one-on-one representation on a blockchain, right? And you can issue that on several blockchains, and in various ways, right? And so we've had fixed income. There's a lot of companies that have tried to tokenize some equities with more or less success and liquidity on chain. But I think this year has really, is really starting to shift pretty abruptly. I think a lot of people have seen the Robinhood announcement where they're tokenizing the equities and also private companies with OpenAI and SpaceX. And so again, I think, for the audience, there are many ways that you can tokenize these assets and funds. We are looking into it, even from ARK's perspective, to being able to tokenize some of our funds. They are basically representations of funds that are held kind of off chain, that can be FSPVs and other wrappers. There are companies that are really issuing a native share of the equity on chain, such as Securitize. There are other companies that are doing this through some kind of debt note or debt instrument. And so I think, there's various ways to attack this. I think there are a lot of companies working on this. Users have to obviously read and carefully see what they're buying into. But I think, we're going to have more regulation on this, and so I think it's going to be a just enormous unlock for equities and other, the other asset classes to come on chain. They're going to be able to be traded 24/7. I think there are new products and new markets that are going to be created because of this, and so yes, we're very excited. Again, I think it's very early on, but I think the fact that we have two of the biggest exchanges in the world, Coinbase and Robinhood, tokenizing with their own chains is just extremely positive.
Yeah, I'll just add a couple of things. really this historically, financial markets have been very regional. What this does is globalize the financial markets. So incredible access to clients and for clients. The other thing, there's a bit of a qualifier here. I think that OpenAI has disagreed openly with Robinhood's ability to do this. So I think even that's good. We'll get some clarification as Robinhood reassesses, how it is going to go about tokenizing securities. So we're still in, as Lorenzo is saying, we're still in a period where there's a lot of experimentation and, attempts to figure out how best to do this. And so you'll probably be hearing a lot more about it.
Yeah, adding to highlighting what Kathy's saying on the democratization, I think Robinhood announced specifically, the tokenization of OpenAI and SpaceX shares. I just want to add that obviously ARK has been spearheading really the democratization of a lot of this asset class, and for people that are interested, we actually own open both companies, SpaceX and OpenAI, in the ARK Interval Venture Fund, ARKVX. And so I think I encourage people to go check this fund, which is a fund that is liquid but gives access to private companies, and we're very, very excited about that. People can subscribe for as low as $500. And so I think, if people are really interested in OpenAI, SpaceX, some of others companies, we own Anthropic, Hammerspace, and other companies, I think it's really a good vehicle to check out.
Yeah, and I'll also say, in terms of the kinds of companies we own in venture, you'll find late stage and very large companies, but you will also find earlier stage. We were very happy to be able to get access to Neuralink, for example.
Yeah, thank you, Lorenzo and Kathy. I think a lot of this goes to, Kathy, what you were saying at the beginning here. A headwind that's turning into a tailwind with deregulation that is encouraging innovation. So it's really exciting for crypto. And another leg that we've talked about in that deregulation is in the healthcare space. So this next question, we're going to go to Shay. We've seen the team recently purchasing some shares of Beam Therapeutics across the ETF suite. Could you please provide an updated investment thesis or rationale for this holding?
Yeah, sure. Thank you for the question. So we continue to have strong conviction in Beam Therapeutics, which is pioneering precision genetic medicines through base editing. And this is an innovative CRISPR-derived technology that can alter a single letter of DNA without breaking its double helix structure. So this kind of exquisite precision really allows for predictable gene outcomes that can directly target the root cause of many genetic diseases while avoiding potential off-target effects. So the second quarter we've just passed here was really important. So we continue to see a growing body of clinical evidence that de-risks Beam's base editing platform, including updates that show a single dose can achieve durable, dose-dependent correction of disease-causing mutations of both sickle cell disease and alpha-1 antitrypsin deficiency, otherwise known as AATD, which is a genetic disorder that can cause lung or liver disease. Now, importantly, this second quarter really marked an inflection point for gene therapy, not just through Beam's internal data, but also via several notable external developments in the field. So I want to pause here to really dive into this. So for context, we've already witnessed the promising power of gene editing through CRISPR Therapeutics and Vertex Pharmaceuticals' Casgevy. This was the first FDA-approved use of CRISPR as a functional cure for sickle cell disease and transfusion-dependent beta thalassemia. So while Casgevy is an ex vivo therapy, meaning the cells are edited outside the body and then reinfused back to the patient, the field is really rapidly progressing here towards in vivo approaches, meaning that we can edit genes directly within the body. And this shift could expand gene editing's reach from just rare diseases to far more prevalent conditions. So a compelling validation of this paradigm shift came just recently here in June, when Eli Lilly announced a $1.3 billion acquisition of Verve Therapeutics, which is a company that's leveraging Beam's base editing technology to develop in vivo single course therapies aimed at permanently lowering cardiovascular risk. So here we're seeing for the first time a major pharmaceutical company making a substantial bet and commitment to developing in vivo gene editing targeting not only rare genetic conditions, but also cardiovascular disease, which is the world's leading cause of death. So in our view, the Verve acquisition is a strong signal that gene editing platforms are maturing beyond the niche applications of rare disease and can really scale from treating tens of thousands of patients to millions. So another inspiring example from the quarter that I really want to highlight as well was the development of a personalized gene therapy that leveraged Beam's base editing technology. This gene therapy was for baby KJ, who was born with a rare metabolic disorder, and his life-saving treatment was developed and delivered within just 6 months. This is really unprecedented, an extraordinary showcase of genetic medicine's speed and curative potential. And we believe this is really just the beginning here. Here, even at the start of July, we've seen the Innovative Genomics Institute, which was led by Jennifer Doudna, who is the pioneering scientist behind the discovery of CRISPR, and the Chan Zuckerberg Initiative announcing funding for a new center that is specifically focused on pediatric CRISPR cures. So altogether, we are seeing multiple signals here of accelerating momentum and a commitment in the space to developing gene editing cures. And this momentum has lifted sentiment not just around Beam, but also other leading gene editing names in our portfolio, including CRISPR Therapeutics and Prime Medicine. So I'd really conclude here, coming out of 2Q, we see a transformative future ahead for gene editing, and we maintain a strong conviction in Beam, which we believe is strategically positioned to be a leader in this revolution.
Yeah, and I'll just add something to Shay's comments. One of the questions we've gotten is, oh my gosh, will ARKG ever perform? Not outperform, but perform, because it really, if you look at the chart from the time we launched in late 2014 until very recently, it had gone nowhere with a lot of volatility in between. And yet the strides in science are amazing. So what was that all about? One of the reasons this part of the industry was not performing was the lack of M&A in the last administration. So this is back to one of the catalysts that Dan mentioned, which is critically important here, deregulation. And so with the FTC now more M&A friendly, we're beginning to see a lot more M&A. And this is the part of the market that needed that strategic price discovery more than any others, because it's early stage. And so many companies are not making much in the way of profits, if any. And so strategic price discovery is the only way that the market has to validate what they're doing. Well, again, as Shay mentioned, Lilly's purchase of Verve rang the bell there. And then the other form of deregulation, and it's happening more in healthcare, I think, than any other industry, which is the surprise under this FDA and HHS. The deregulation and the use of innovative technologies, especially AI, now in research discovery, is transforming, will transform all of healthcare, we think. And so we believe that particular fund, ARKG, and the positions we hold in ARKK in the multi-omic space, it's about 25% of the portfolio, are ripe for significant outperformance, making up for lost time. Now, we can't promise that, of course, but having flatlined when all is said and done for 11 years, as all of this progress was taking place, we think there's a lot of catch up ahead.
Thank you, Kathy and Shay. And I think deregulation may be the name of today's webinar, just because this next question in here is focusing on the energy space. So, Sam, for you, do any of ARK's funds invest in the nuclear energy opportunity? And if so, which companies and why?
Sure. So it's in a couple of our funds. In ARKK, we have BWX Technologies. And BWX Technologies, if you're familiar with nuclear, this is the nuclear provider for the US Navy. And so they've got an extremely stable business with that. But with all of this new wave of deregulation and the US deciding finally to get back on the right track to electricity cost declines, they've been making moves into the commercial space as well. And we believe, their expertise with the Navy is positioning them well there. In ARKQ, we have three names for nuclear. So we have BWX Technologies, and then we also have Cameco and Oklo. And so Cameco is more of a commodity play, but they also own Westinghouse with Brookfield. And so that gives them good exposure to a lot of the components and supply chain there through the fuel side as well. And then Oklo's part of this new age, new breed of companies going after small modular reactors. And Oklo's moving quickly. They're looking to build and operate their plant and hoping that in doing so, that will make it so that they only have to go through one approval as the owner and operator. And they're trying to use a tried and true type of technology. So they're also hoping that that will make the regulatory process easier. And they've been getting good support so far. And so those are the three nuclear plays in ARKQ.
Great, thank you, Sam. And our final question here, shifting back to the crypto space and some interesting news development over the holiday weekend. So, David, as our Bitcoin on-chain analyst, after 14 years, a dormant Bitcoin wallet holding around 80,000 Bitcoins, worth roughly 8.6 billion USD, moved funds or moved Bitcoin on July 4th. Could you just give our listeners kind of the story behind this activity?
Sure. So, as Dan mentioned, July 4th, there was a big on-chain transaction in the Bitcoin network. It was a total of 80,000 Bitcoin in 10,000 batches. So 8 transactions of 10,000 each. There's several theories of what could have caused this, larger movement in the network. It's very unprecedented in terms of we haven't seen this large amount of Bitcoin being transferred after being dormant for basically 15 years. These are addresses that were completely dormant since 2011, about May 2011 or so. There's two consensus theories as of now, or there's two top theories, let's call them. One is, my guess is the one that it's been most widely reported or theorized in the media today, which is the coins are Roger Ver. Roger Ver, also known as Bitcoin Jesus, he's a very early adopter of Bitcoin and an early evangelist of Bitcoin. That's why he has the name. And he got charged by the DOJ for tax fraud last April. So the inference, and this is completely hypothetical or theoretical at this point, is that he's trying to work a deal with the DOJ by a big settlement that involves potentially, settling on some Bitcoin, providing that to the federal government, and ultimately that would become a big portion of the Bitcoin strategic reserve for the United States. So that's one theory. There's another theory proposed by a pseudonymous author called Cybertalks. I believe he has a blog, and he wrote a piece which is quite interesting. And his theory is that this transaction may have been an exploit, not of the Bitcoin network. The Bitcoin network is still secure, but of a faulty randomizer within the wallets that were used at the time. So We know that all the 8 addresses holding this Bitcoin are a legacy format, or more technically speaking, a P2PKH format. It is known that the wallets that provided private keys at the time had very low entropy and very bad randomization, which you need cryptographically to keep the wallet secure. So the inference is that someone, unclear who, may have attacked this vulnerability of this specific wallet, not the Bitcoin network, but the wallets themselves, and through a very sophisticated strategy, claim ownership of the coins, and to avoid any theft accusations, this person send a few messages embedded in the blockchain of Bitcoin. We call them OP return messages. The messages were, just to summarize, a legal notice, pretty much given the hint to a potential owner that I now have control of the private keys. You have a legal notice to claim ownership and demonstrate your prior ownership to the coins. Otherwise, they're going to be mine, basically. And he actually puts a deadline, which is about late September, early October. I think the latest one is October 5th. This is still all hypothetical, both versions of this. In any case, I think monitoring the wallets in the short and midterm future is very important. See what activity transpires in those addresses, if they're moved again, and if so, where are they being moved to? And on top of that, obviously, we are closely monitoring both other big wallets that may have this P2PKH legacy format, and also the October 5th or the late September deadlines implied by the blockchain messages that we saw during the transaction.
And I'll just add one thing here. What has always intrigued me about Bitcoin is the passion that people have in preserving the security of the network. And as David said, that was not violated here. But this could be what is called a white hat hacker, which is really a hacker who is, trying to surface where the system could be exploited. But the white hat hackers exploit the system or the vulnerability of the system, and actually are willing to give that Bitcoin back to its rightful owner if they claim it. And that could be the case here. It could be. Again, it's like a giant neighborhood watch. Everyone with a vested interest in Bitcoin, especially developers, are guarding it. Everyone is guarding it. So pretty interesting.
Great, thank you. Thank you, David and Kathy. And certainly there will be more to come on this developing story over the next couple of months. But with that, that will conclude today's webinar. We will briefly show performance statistics that can be found on arc-funds.com. And thank you to everyone who listened to today's call. And of course, thank you again to the entire ARC team.